Today, Ripple's native token climbs after ProShares gets SEC approval to launch 3 new XRP ETFs. Senator Cynthia Lummis takes issue with the Fed's withdrawal of crypto guidance for banks, and Veronica McGregor of Exodus explains what was achieved at the last roundtable hosted by the SEC's Crypto Task Force. Welcome to CNBC's Crypto World. I'm Mackenzie Sagalos. Crypto prices are mixed to start the week, with Bitcoin trading flat just under $94,000 as of noon Eastern. Ether fell under 2%, and Ripple's native token, XRP, climbed by the same amount after ProShares got the green light from the SEC to launch 3 new futures-based XRP ETFs. Now, this development comes after Ripple's legal battle with the SEC has ended, opening the door for XRP-related advancements. Now, so far, there's been no development on any spot XRP ETF filings. Okay, let's talk about the top stories. Coinbase wants the government to let SEC staff trade crypto. The company's chief legal officer, Paul Grewal, wrote an open letter to the Office of Government Ethics asking it to rescind and update a legal advisory so that commission staff can hold digital assets. Grewal took to X on Friday, sharing the letter, and argued, quote, any potential conflicts can easily be managed. Now, by the way, today Coinbase Asset Management announced that it's launching a new Bitcoin yield fund. The company's new investment vehicle will be available for international customers only, starting May 1st. Coinbase says that it's meant to address the growing institutional demand for Bitcoin yield. The fund aims for a 4 to 8% net return in Bitcoin per year over a market cycle, with investors subscribing and redeeming in Bitcoin. Now, unlike staked digital assets such as Ether and Solana, Bitcoin does not generate yield, so similar funds have emerged to address this limitation. Now, Coinbase says these funds usually require institutional allocators to take on significant investment and operational risk, so the firm designed the new fund to lower that exposure. As of noon, Coinbase shares dipped more than 3.5%. Next, Senator Cynthia Lummis claims the Fed's withdrawal of crypto guidance for banks is, quote, just lip service. In a post on X on Friday, the Republican Wyoming senator laid out several reasons why she feels that way, saying that unlike other agencies, such as the Office of the Comptroller of the Currency and the FDIC, the Fed still uses reputation risk in bank supervision. She also pointed out that a policy statement which says that Bitcoin and other cryptocurrencies are unsafe and unsound has not been withdrawn. Now, Lummis's post is in response to the Fed's Reserve Board decision to withdraw a pair of supervisory letters, including one stipulating that banks give advance notice of planned or current activities tied to crypto. The Fed joined the FDIC and OCC in withdrawing a pair of statements related to the crypto exposure and activity of banks. Now, we reached out to the Fed for comment but didn't hear back right away. Finally, as we told you in our last show, the SEC's Crypto Task Force hosted another policy roundtable on Friday focused on crypto custody rules. The event was the second of 4 roundtables hosted by the agency's new task force, and the first one with the newly appointed SEC Chair Paul Atkins at the helm. The crypto-friendly SEC Chair argued at the roundtable that crypto innovation has been stifled over the past several years, and that the market seems to indicate that the current framework badly needs attention. On the sidelines of the session, Atkins told reporters that he was open to a broad reassessment of crypto-related rules, adding that while it's good to have input from Congress, the agency already has ample room to maneuver. Sticking with the crypto policy roundtable for our main story. I was at that event in Washington, D.C. on Friday, and so was Veronica McGregor, the chief legal officer at crypto wallet provider Exodus. We discussed the highlights of the event and what was said behind closed doors. So at Friday's roundtable, SEC Chair Atkins expressed concerns about stifled crypto innovation. From your perspective, what are the most pressing regulatory hurdles facing crypto companies today, and how is Exodus navigating these challenges?
Thanks for asking, and thanks for having me on. I appreciate that. Exodus, we are, just to make sure everyone understands, we are a self-custody crypto wallet, allowing our users to interact with their assets within a self-custody wallet, a software wallet. And the SEC has, well, not just the SEC, this administration has shown that they're rolling out sort of a comprehensive approach to crypto regulation, which the industry has been asking for clear regulation for a really long time. As far back as I can remember, we've been asking for reasonable, applicable, appropriate regulation. So we're hoping that that's coming. It looks like it probably is, based on the SEC holding these roundtables, which is historic, honestly, to have the SEC ask for the industry's approach and input as they develop their own framework for our assets.
And what were your biggest takeaways from that roundtable? Was there anything that surprised you or shifted your view on where the SEC is headed?
Well, honestly, just having the roundtables are kind of surprising and refreshing, right? So there's that, just starting with that. My roundtable was on custody, and the focus tended to be on like custodial solutions, meaning, folks that are going to be holding other people's assets. And so I just wanted to be in there to make sure that self-custody is protected, as is sort of the original intent of crypto in general, and make sure that customers get to have the option and keep the optionality out there for them.
Do you feel that the tone and substance of Friday's roundtable signal a real shift at the SEC, or was it more of a listening exercise without firm commitments just yet?
I got to say, no, it looked like a real shift to me. I spent some time, there was a speaker's dinner the night before. I spent some time with Commissioner Peirce, and we talked about beekeeping, but we also talked about how there is now a shift. It's a 180 pivot, Mackenzie. I mean, it just is. It's very refreshing to see this coming out of the agencies and to see the bills that are being floated around Congress right now. It's a 180 pivot from 6 months ago for sure.
Now, Commissioner Peirce has been an advocate of the industry for several years now. It was day 4 on the job for Paul Atkins. Any impressions about how he's come into the role? Obviously, he's very early in his tenure, but any takeaways there?
Honestly, he's going to know what he's doing. This is not a new post really. So I don't really have day 4. I don't really have any epiphanies about it, but it is rather what I expected. He introduced our panel. It was his first public appearance since being confirmed. So that was a nice little kick for our panel. And I think he's going to set the SEC on the right course.
Since President Trump returned to power, we've seen a surge of pro-crypto policy moves from the SEC. With Chairman Atkins now leading the agency, what additional changes would you like to see?
Well, I'd like to see other agencies weigh in. Right now, the SEC is going to take its time to figure out, what they're going to think about these assets and how they're going to treat those offering those assets. But the other there's plenty of agencies that have dipped their toe in the crypto water over the years, and we would like to see, some of what they're thinking.
Now, Exodus made some pretty significant political contributions, including to the PAC Stand with Crypto. From your perspective, has that investment paid off yet? And how do you measure success when it comes to political advocacy?
I would say those donations did pay off. And for the viewers, we made a pledge, a cash donation to Stand with Crypto, and then we also did a big marketing buy to push people to the Stand with Crypto. And there were a lot of Get Out the Vote events. And given that, we have an administration that is, touting itself as pro-crypto and making some changes that need to be made, I would say those donations were, strategically placed and are paying off.
Now, Exodus emphasizes self-custody, ensuring that users retain control over their private keys. How does that core philosophy shape your approach to regulatory compliance and user protection?
So regulatory compliance would be slightly lighter for us in terms of what we have to comply with, because we have a self-custody wallet and therefore we don't have a lot of information on users. But in reality, if you look at any of the big hacks that have happened or exploits where people have lost money, those have all been in a custody environment. So a centralized exchange or some other situation where someone could hack into the system and get user money. In our case, if you hack into our system, somehow you're going to get our money and not users. So what I always say, and I think what I said on Friday, is that even if we wanted to steal your money, we couldn't.
Last question for you. You've worked across the crypto regulatory landscape, from leading Shapeshift's legal strategy during a pivotal era to practicing at top law firms. How have those experiences shaped your approach to building a legal and compliance framework for Exodus today, especially in a market that's still evolving so quickly?
Thank you for that question. I've been in crypto since 2011 when someone brought it up to me and I decided to study it, but there was no practice for it then. So what we look for and what we try to do, and what I look for when I build a team, is creative problem solvers. We don't want to say, no, you can't do that. We want to, unless it's obviously criminal, but we don't want to say, no, we want to say, how do we get to the end goal here, and not run afoul of regulation. And so I need creative problem solvers, and thinkers and doers.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.